Good morning, everybody, and welcome to this panel on regional integration, infrastructure support to tackling obstacles to trade and investment. I think it was Barbara who was saying this morning that we have to have some level of flexibility today, and I was just volunteered to chair this panel a few minutes ago, which I accepted, and I hope we're going to try to do the best job we can. But we have a very good panel, a distinguished panel, and the way I propose to organize this panel is that I will go ahead and ask a question to each of the panelists, and then have them respond, hopefully give a brief response to the question, and then there will be follow-up questions, and then we will call on the audience to ask questions. Let me maybe start to say a few words about what I do. Barbara already said I'm the global head for IFC InfraVentures. This is the global infrastructure project development business for the World Bank Group, which I'm heading. We have two regions of focus, South Asia and Sub-Saharan Africa. And certainly infrastructure is an important enabler for trade in the continent. At IFC, we invested about $6 billion of private investment in infrastructure globally, about 1.2 billion in Sub-Saharan Africa. But I can tell you that at IFC, we have appetite for investing even more money than we've invested. $1.2 billion is relatively small compared to the needs in the continent, and we have the balance sheet to do so. One of the challenges that some of the panelists will be talking about is the availability of bankable projects that can actually receive the financing, the investments which are available to fund those projects. So my group at IFC, InfraVentures, is helping address the challenge, but as of now, I'm going to stop here and basically invite the panelists to speak. Let me, maybe I'm going to turn to the audience, but maybe a couple of questions. And I know Minister Kituyi has to leave, maybe, so let me go to you with a follow-up question. You mentioned something which is very important, the coherence of policy, certainly at the national level, but also at the regional level. But how do we achieve that? Because everybody says, yes, if you have the right policy framework, you know, you're going to have a lot of investment. So you used to be a minister. So how do you, what do you do to achieve that?
In our World Investment Report 2014, we set out some of the conditions which can unlock new resources for Africa's satisfying the mobilizing resources for the SDG era. And one of these is the new relevance of the developmental state. That the main purpose of government should be how to mobilize the different forms of resources and policy priorities that are necessary to reverse the decline, at least in relative terms, in sometimes actually absolute terms, of Africa's attractiveness as a destination for investment. One of the main levers of this is peer influence, where countries in a region agree at a global level. Often you have leaders within the region who push their colleagues to prioritize what they are agreed on. I've seen this with infrastructure and North Corridor in Eastern Africa. I've seen this in a number of areas, in energy, for example, Ethiopia's leadership. And I can see that intellectual leadership and even leadership from the business community can help to set right priorities. Continued engagement between partners on how to leverage limited resources in the right way can overcome the missed opportunity of smart use of ODA to attract partnership with the private sector, for example. And growing stigma on corruption reduces the cost of transaction, the cost of doing business, and improves the attractiveness. So some of these things can be done because of internal political attention, but some can be peer influence. NEPAD is a lever in this, Africa Union can play a larger role, but even within the regional recs that are emerging, clear commitment to certain standards as values on governance can very, very much help to streamline and at least limit the excesses of deviation from economic goals because of political temptation.
Yeah. Absolutely. Thank you very much. That's very useful. I'm looking at the audience. I don't know if the folks that have questions.
Can I make a footnote?
Yeah. So if folks have questions, I'm going to give the floor to Mr. Yomkela, and then maybe we'll go to the audience. Please, your follow-up comments that you want to make.
I just wanted to underscore one of the points Tas made, the lack of project development facility. This was debated a lot last week in the retreat organized by the president of the African Development Bank. The average time to incubate a project in energy in Africa, anywhere from 3 to 6 years, from project idea to pre-feasibility study, feasibility study, environmental impact assessment, financial architecture, all of that. That's too long. And it's very expensive. There's not enough money. So what we're advocating for now, TAS, is that we push for about $500 million window to be established within the Green Climate Fund to address this issue of project development. Otherwise, you will not have enough deal flow. Too many few projects. You have some feasibility studies, but never taken up to bankability. Some people have reports, but it's not a bankable project. And it costs money to do big infrastructure projects. In fact, even for small mini-grid projects in Africa, we don't have entrepreneurs that can cough up, you know, $40,000, $50,000, $100,000 upfront to design this, even these small community-based projects.
Absolutely. Definitely, I think there is a global consensus that one of the challenges of developing infrastructure in emerging market, it's not only in Africa, but it's also in other regions, is the limited availability of project development support, which is early stage risk capital, but also the technical skills, financial skills to put those projects together. So that's very important, and so we would be supporting this initiative of allocating more resources to project development. Certainly my group, IFC InfraVentures, does that, but we need more folks, more institutions to come into this area. Africa 50 is one of them, and what you're proposing should be really an important tool that should be available. Now, I'm being told that okay, one of our panelists has to leave, actually left also.
You have to catch a flight too.
Mr. Yomkela also has to catch a flight. So how about we get some comments from the audience, because we just about to finish. We have a few more minutes. Okay, so that's why I like to get questions from the audience so that I don't keep the floor for myself. Yes, sir.
Good afternoon. Yes, good afternoon. I'm Malik Smith. I'm with Yoshida International. This question is for Mr. Yomkela. What new technologies has your leadership group been looking at for delivering energy in West Africa?
All right. Yes, please.
We have not chosen any technology. We are saying, if you look at the context of Africa, Africa needs to use all its resources. We have huge hydro potential. Less than 15% of our hydro potential has been built compared to 80% in OECD countries. Africa, 30% of the new oil and gas discoveries in the last 6 years was in Africa. We believe they should use their gas as well. There are other resources, but in some kind of an integrated model. And that's why the regional collaboration will be crucial. Of course, some NGOs do not want Africa to talk about hydro. Hydro is still a viable cheap source, and we have to exploit it. It is steady if you manage the ecosystem well, and that can be done. It's done well in Norway, in Brazil, it can be done well in Africa. So we're looking at all resources, but there is a particular push we're making now, because we're talking electricity, but we should also talk cooking solutions. So one of the things we're campaigning heavily on is liquefied petroleum gas, LPG, for cooking solutions. That one is one that we're biased towards campaigning heavily, but also LNG, gas to power projects.
Okay, there is a formidable technology called inline hydro. And inline hydro is where if you have any liquid flowing through a pipe 5 miles an hour, you can create 1 megawatt of electricity. So in Nigeria, we have over 3,000 miles of pipeline, and it powers, of course, oil goes through it, we have sewage goes through some. Just think if you look at our pipelines in these countries, inline hydro, it would be a very good opportunity where we could get to power very quickly to deliver it.
All right, thank you, sir. Very good, and we have to look at all different technologies, as Mr. Juncker said. Let me just, do you have time for the closing remarks of the panelists? Okay, very short closing. Yeah, very short closing remarks. I negotiated for you, so please quick.
Excellent. So I'll keep mine quite brief, but it's interesting for me being on this panel because I think hopefully all of you heard it. We're not just talking about challenges, we're talking about solutions. And I think the solutions have to be physical infrastructure and frameworks that enable trade and investment. And it's really only by bringing those two things together that we really are going to be successful. But I could hear nothing but solutions up on this table, so it was fantastic.
Yes?
Yeah, just to add, actually, I agree with you. I think we should put our resources together because Africa always suffered from fragmentation. We should stop this and we should work together.
Fantastic. Mr. Otieno.
Yeah, for us here at ATI, we say we are there to give you cover if you want to invest in Africa and you're afraid of political risk, or you're afraid of non-payment. So we'll cover you and talk to us.
Fantastic. Let's go and build infrastructure in the continent. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.